Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. Welcome back to Kaiser Watch, John.
Jim, pleasure to be back on the show.
John, you're heading off this weekend to Toronto to participate in the Metals Investor Forum on Saturday and Sunday, and then PDAC on Monday through Wednesday. What are your plans for these back-to-back in-person conferences?
Well, my goal is to have as many in-person interactions with real people and not catch COVID so that I make it back here safe and sound. The Metals Investor Forum takes place on Saturday and Sunday, June 11th, 12th, and it's at the Delta Hotel just across from the main entrance of the south building of the Convention Center, where PDAC is being held on Monday through Wednesday, June 13th to 15th. At the Metals Investor Forum, there'll be 37 juniors presenting. I counted 350 resource companies in the Investors Exchange presenting from Monday to Wednesday at PDAC. So it's going to be a lot easier for me to check out the companies at the Metals Investor Forum than it will be the following days at PDAC, where I will be there Monday, Tuesday, heading home Tuesday night, hopefully with a negative COVID test. The Metals Investor Forum is a different format from PDAC. PDAC is more like the Vancouver-Cambridge show, except that in the case of PDAC, there is the Investors Exchange where, these 300 plus companies exhibit. It's on the 800 floor, where you have to pay $25 a day to get in there. For the Metals Investor Forum, you don't have to pay anything. You do need to register in advance, though I'm told that this year, because of all this traffic that will be picking up their badges at PDAC on Sunday, if those people walk over to the Metals Investor Forum in the Delta Hotel, they will be able to register in person. But if you know you're going to be in the vicinity and want to catch any of the talks, register in advance and make it simple for yourself. My session will be on Sunday at 3:30. It is the last session, and its theme will revolve around Lithium Mania 2.0. I have only 3 companies in this session, which starts at 3:30. They are Brunswick Exploration, which has assembled a portfolio of grassroots pegmatite projects, and the other is Avalon Advanced Materials, which has the advanced stage separations pegmatite project that it would like to put into production. So these are sort of the bookends of the extreme, from the beginning of the grassroots exploration all the way towards the feasibility demonstration part of the exploration development cycle. And the third company is Sonoro Gold. And what it's working on is its Cerro Caliche project in Mexico, and it is trying to go beyond feasibility demonstration. It's already done the PEA. They're now in the process of permitting this. They hope to have this all done in construction underway by the end of the year, in addition to financing. And they are starting off with a commercial scale mine plan, but not what you would call a commercial scale mine life. That will come later. So they want to be in a position to be able to track, with production ramping up quickly, any increase in the price of gold. The project works with the current gold price that we have, so it is, in a sense, a leveraged bet on the upside for gold. But the main top point of theme of my talk will be the Lithium Mania 2.0, with an emphasis aiming at the audience that will be largely absent, namely the younger generations, the millennials, and the even younger group, the Generation Z. These are the people that are missing from the resource juniors, and I see the Lithium Mania 2.0 idea as a perfect educational gateway to attract this audience, which generally sees mining as something nasty and dirty, into this sector. My presentation will be only 20 minutes long, so it'll be mercifully short. It will be live streamed for those who register and want to watch it that Sunday afternoon Eastern time at 3:30. But also I recommend, if you want to really immerse yourself in this whole idea of the younger generations becoming interested in the resource sector, check out the hour-and-a-half presentation that Albert Lauren of Between Plays and I did about a week and a half ago. The link to it is on my homepage. It covers a much broader aspect of the sort of like electric vehicle sector and the critical mineral sector than I will be talking about at the MIF conference. On Monday, when I head off to the PDAC at between 11:30 and 1 o'clock, I will be part of the Pieces of 8 roundtable that Peter Bodish has organized. Kai Hoffman will moderate. There's 8 of us newsletter writer types who will be sitting there talking about the state of the junior resource sector and the broader resource sector, and hopefully not getting into any bun fights between liberals and the sort of Putin poodles that are often part of this newsletter writer scene. And this will be in room 801 on the same floor as the investor exchange that I mentioned earlier. You will have to pay $25 to get in there. I do not know if they will make it available for viewing later on. The PDAC has this policy of only for the paying members is anything that they record available. But after that, Monday and Tuesday, I'll be walking the floor, have all these companies in the Kaiser Research search engine so that I can see who's there. I can pick out which ones are the lithium companies and any others that are existing bottom fish recommendations, and try and hit as many of them as possible. And, if it ends up being a bowling alley with hardly anybody there because it is June and it's nice weather in Toronto, unlike March when it's freezing cold when this is normally held, well, that'll be fine for me because I'll be able to walk up to an exhibit booth and not have to wait for the company representative to finish talking to somebody else.
John, why do you think Lithium Mania 2.0 is a good educational gateway for younger generations such as the millennials?
Well, we've seen the younger generations really get into the stock market in the last couple of years. It started with Robinhood several years ago with the whole cannabis phenomenon. But when COVID hit and people were stuck in lockdown and not able to do anything, a lot of young people really did discover the market, started trading it, caught this, quantitative easing boost boom in equities, and really made an awful lot of money with using mainly the strategy of momentum gambling. The trend is your friend, particularly when it's up, not when it's down. And they made an awful lot of money, but they've also given a lot of it back. A lot are leaving the stock market after not just losing all their gains, but their initial investment also. So this crowd, I think, the ones that are the survivors, these are the ones that I would like to attract to the resource junior game, which does not lend itself to momentum gambling because stocks don't run forever and ever. They respond to news. News comes in these sporadic bursts of events, news release, drill results, economic study, all these sorts of things for which you have to wait for. So it's outcome-based, slow fundamental outcome-based gambling where you place a bet, you watch it, and you play it over time. And the venture capital VCs in Silicon Valley, with the private equity, they do this. They back dozens of these early-stage companies, and they expect a very few of them to make staggering gains, a bunch of them to make so-so gains, and a few to be outright duds. But for your ordinary millennial, that person will not have the capital to invest in one of these private equity funds. And even if they do have that much capital, they're going to be passive. They're at the mercy of whatever it is that the VCs are putting the money into, which lately seems to have been crypto, which may not turn out to be such a bright idea as we start to get into a much tougher market. But with the resource sector, in particular, when you look at it from a bottom fishing perspective, such as I do, where you're looking for companies that have a low valuation because they're missing some piece, this is where you can do your homework. And I like the resource sector because although it's complex, there is a finite number of things that you need to learn, and they generally map from one play to another, from one metal to another. There are peculiarities that you need to learn for each one, but the knowledge that you accumulate as you learn this sector, it's scalable. I stay away from all these non-resource stories because every new widget concept or technology concept is completely new and different. I don't understand anything about it. If I were to try and assemble a portfolio of 10 to 20 of such cheap bottom fish in these other sectors, well, I'd probably do worse than a chimp throwing darts at the stock page and coming up with a group that's actually going to go up. But I'm quite comfortable with the resource sector. And the lithium mania is good because there's a whole group of reasons why it should pull in these millennials. First of all, the target metal, lithium, is absolutely relevant to millennials in an existential manner. I mean, the millennials are going to be around, and the Gen Z, to experience the consequences of global warming if it is not tamed and subdued to, 1.5 degrees or less warming by 2040, 2050. And decarbonization is a primary tool for doing this. And the electric vehicle sector, it's not going to be the thing that solves it all by itself, but if the electric vehicle fleet replaces the ICE fleet, the internal combustion engine fleet, by, say, 2035, 2040, that will make a big difference in that the gasoline that's being consumed now to move everybody around will no longer be burnt. Electricity will be consumed, and we hope that a combination of nuclear and hydro and renewables and maybe even fusion down the road will provide that electricity and not coal. We'll have to probably deal with natural gas for some time because natural gas is so important. It does have a lower carbon footprint. But the EV replacement of the ICE car fleet, that is of importance to the younger generations. Not so much for me because I'm in my early 60s and I probably won't live to see the consequences of runaway global warming. So this idea of the lithium is important. Now, when you then look at the numbers and all the projections as to how much lithium is going to be required by this future EV fleet, well, it's 5 to 10 times what's being produced right now. Now, the lithium triangle, the brines from the lithium triangle in South America are going to produce a good chunk of this future supply, a good chunk of this future demand. The Australian pegmatite producers have already taken a big portion of this supply and have potential to increase more. But in terms of making up the rest of it, it will have to come from hard rock deposits like those Australian pegmatites, and it's going to have to come from regions such as Canada and Brazil, anywhere where you have these sort of Archean regions or where there was a collision between continental crusts that enabled these granitoid melts to happen and to allow these pegmatites to form on the fringes of these granitoid bodies. So Eastern Canada is an excellent place for that. These pegmatite bodies are relatively simple. They're straightforward. Once you find one, you drill it off, you figure out its geometry, its tonnage, the grade zonation. And because the key mineral is spodumene or petalite, the processing characteristics are understood. They're not cheap. You do need pressure and high temperature to crack this open to make the lithium in the spodumene available to be converted into a battery-grade lithium carbonate or lithium hydroxide. But it is relatively straightforward. And, of course, in Australia we have the JORC disclosure system, and in Canada we have the even better 43101 disclosure system. And I say it's better because the technical report filing requirements for economic studies are far superior in Canada than they are in Australia. So you have all these incredible how-to manuals available on CDAR, which you can pull down and read to find out, okay, how does this particular sector work? How does this project work? And you can build your knowledge with that. But more importantly, with these types of juniors going in there and looking in these areas where the pegmatite bodies have never really been of importance, it's possible to find one that allows the company to turn into a 10 to 100 bagger. And not just one unique one like finding a Voisey's Bay in that big area of Labrador and then finding absolutely nothing else around it. No, amongst the hundreds of companies that will engage in this, there will be dozens of companies repeating this. And the majors are not going to do this because these deposits tend to be small. There's only a few Bikitas and Tankos and Greenbushes in the world that are giant. They've already been found. Maybe some will be found, and then you'll have a junior that will do extremely well, but nobody's going to count on that happening to provide the lithium, the 10 times current supply that's going to be needed by 2035, 2040. And then there's also the analytical framework, such as the rational speculation model that I've developed with outcome visualization, which allows you, based on the information that the companies generate and whose reliability is controlled by the 43101 reporting standards, it allows you to quantify the size of the prize and also to price it according to the stage of uncertainty. Like if it's not yet a resource estimate in place, it's going to be only like a 5 to 10% of the potential value. There is a whole mathematical framework for thinking about that and judging the value, which makes this not just a simple momentum game, it is also a thinking game. But most importantly of all, the missionary zeal that comes with these younger people betting on these Canadian resource juniors, looking for these future lithium mines. Even if you manage to just make money on the ones that you buy and not end up owning the one that becomes the future mine, participating in this action contributes to the statistics game that this is all about. So it has this missionary aspect and feel-good aspect about it. And it's also a way of, when you look at these end-timers who are, sitting on their bag of gold and grumbling about the future and don't care about the twilight that's coming. In fact, they're welcoming it. This is a way to push back. And it does require you to put away your prejudices about mining being dirty. Mining can be dirty, but not when there's a whole system of rules developed over the last 50 years that won't let you get away with doing it dirty. That's what's being done in China and other places like that where there are no such rules or any enforcement of them. So the Lithium Mania 2.0 is a perfect setup for younger people to discover what the resource sector is all about, how it works, to make money at it, to feel good about doing it, and to actually contribute, whether they win or lose, to the future being secured by cutting back the global warming, by enabling the electric vehicle replacement of the internal combustion car engine. And of course, when you listen to all this, okay, so John, why do you have a gold junior in your Metals Investor Forum session? Well, you can't assume that in the long run it will make a difference. The end times psychology may end up prevailing. There may be these trigger events, these cascades, which make the expectations that we can control global warming and mitigate climate change, put them on hold. It may just flush them down the toilet. So you always have to have a hedge in your high-risk portfolio. In this case, gold would gleam during Twilight's last gleaming. When people give up, they'll resort to gold. And even if the lithium enablement is a success, there's other reasons for gold to go up. So it isn't as if you have to watch Sonora Gold turn into a bust as a consequence of your lithium bets paying off. No, your lithium bets can also pay off. And at the same time, other circumstances in the world would enable gold to go substantially higher in real price, in which case a little junior like Sonora Gold is going to benefit. And gold's at the far end of the spectrum of useful things. In fact, it's not useful at all, though it's better than crypto, which has negative usefulness. But there's all these other metals in between. When these young people discover how lithium and resource juniors work, they'll be able to map that to the other metals. So this whole problem of securing future raw material supply for a world where it doesn't just come from the lowest cost, nastiest jurisdiction, that's also going to be a benefit of the younger people discovering the resource juniors and keeping this ecosystem alive for the long run.
What is the significance of the latest Reliance gold results put out by Endurance Gold?
Well, about a week and a half ago, Endurance Gold put out arsenic results for the several dozen RC holes that they had drilled at the Reliance project, which is in southwestern British Columbia near the Braylorn district. And they have defined something what they call the Eagle South 020 zone. Now, just to give a little bit of background here, the Reliance project has a highly altered corridor between the so-called Royal Shear and the Treasure Shear. It runs in a northeast southwest direction down this big hill in that area. It's about 300 meters wide, and they've found these zones sort of dipping about 30 degrees, and it's 10 to 15 meters wide and running 10 to 15 grams per ton, which is like $500 to $1,000 rock in terms of the current gold price. But the problem with this scenario here is that because this is a fault-bounded corridor, when you chase this towards the west, you run out of the zone. It just disappears because it's cut off. So that becomes a tonnage building challenge. And the work that the company did with the RC drilling is to firm up the idea that where the Eagle South zone begins, the shallow dip, it seems to flex and become more subvertical. And they've seen that the arsenic correlated reasonably well with high gold values. And when they published all these arsenic results, the market said, "Oh, this is good." But does the correlation between arsenic and gold still hold? Because the zones can change. When you march further to the southeast direction, you may lose that correlation. You may just have arsenic. And so yesterday or the day before, they published results for the first 3 holes, and 2 of them, 61 and 62, did deliver substantial gold intersection correlating very high with 1,500 to 3,000 ppm arsenic values. For example, hole 61 yielded several 3-meter intervals of 6, 7 to 9 grams per ton gold. But the exciting one, which is in the area of the 020 hole, which was drilled late last year, which seemed to indicate that the zone was starting to dip more vertically than shallowy, that yielded 30 meters of 6.6 grams per ton gold, and that included 9 meters of almost 14 grams per ton gold. So the market saw this and says, okay, we've got all this, we can see that the zone tracks to the southeast in this 020 target direction, and this target that they've now put on their map and highlighted in a darker shade of red, it's important because this being an orogenic system, you can chase this down dip for 1,000 meters, 2,000 meters in this case, because this system's believed to be very high up in this type of system. And so we're starting to see the tonnage potential emerge. The strike potential to the southeast is also important. They've got a big gold geochem anomaly there. They drilled RC holes 81 and 82, and that did not kick back any interesting arsenic readings. So clearly this gold geochem, which is coming from uphill, is coming from a continuation of the zone, possibly fault offset. And now they have the core rig on the property. It's going to churn out at least 8,000 meters during the rest of the year that they finished with the RC drilling. And this will be able to probe the system deeper. So the market's starting to warm up to the Reliance project because it sees that, okay, the rest of these RC assays with the high arsenic readings are going to come in good. And when the core rig goes in there and starts intersecting similar zones, they won't be able to get arsenic readings because with the core you get too erratic numbers, so they don't bother using an XRF unit. But the Endurance's Reliance project is starting to hit that tipping point where people are starting to believe that this is an emerging gold play. And sometime probably in August, when we start seeing core results, we will see this thing wake up, and this will be turned from a bottom for spec-rated story into a good spec value rated Kaiser favorite.
Why did Bell Copper drop after reporting assays for its latest Big Sandy drill hole?
Well, Jim, the stock was around 40 cents. It was as high as 60 cents earlier this year when we talked about it on Kaiser Watch. It was 40 cents just before the news came out. And in several days, it's plunged as low as 20 cents, down 50%. And I'm scratching my head at this reaction and saying, but the results are exactly what management guided us to expect. Now, just again to provide some background, the Big Sandy project is in Arizona. It's in an area east of where a known stock, a porphyry stock, has been truncated. The lower part, that's not very interesting in terms of copper content, remains. It sticks out of the ground, but there was a fault that decapitated it, moved it to the east, and Tim Marsh's sleuthing has been to figure out where under the gravel that's in the basin in between is the upper part of this system. Where did it end up? And so they've drilled a few holes over the past couple years, and this latest one, number 3, it was an angled hole, and it went through, I think it was about 1,000 feet of 1,000 meters, or 700 meters of gravel, which took them several months to do because drilling through gravel is a very big pain. And then they went through a leach cap and then intersected a 200-meter interval between sort of 1,300 and 1,500 meters of what was chalcocite enrichment. And they had an XRF unit, so they could do an approximate reading of what the copper mineralization was going to be like. And if you talk to Tim Marsh, you're saying, well, I don't think this is the 0.6% copper or better that you're going to need for an underground block caving exercise. And in fact, the hole, when it punched through the leach, the enrichment blanket, it went into what's called sort of the outer phyllic part of the porphyry system, and that tends to be dominated by pyrite. And they were pushed that hole to the absolute limit, 2,026 meters that the drill could take, and they were hoping to hit the inferred edge where the copper shell begins, where you get that hypogene copper enrichment. Unfortunately, in the news that came out a couple days ago, they reported that the drill hole had steepened to 80 degrees and had never entered the shell, the copper shell, and we had hoped to see it enter the shell because this would firm up the extrapolations about where is this body relative to the number three drill pad. Where should we drill the next hole? And they've already kind of figured out, okay, it's got to be there, and they've permitted for additional drill pads 900 meters west of hole 3. The market had hoped that they might start a wedge hole, what they would want to call 3A, from that drill pad while they wait for the permitting, because they weren't sure when the permitting would come through for the new location. But from the press release, it's clear they are not going to drill this angled hole. Now, the 200-meter interval assayed 0.42% copper, which is no good at this depth. And the rest of that hole, where it steepened and stayed in that outer shell, that averaged 500 or so meters of 0.16% copper, which is definitely worthless. And I think the market saw this and had a negative reaction. Now, Tim Marsh has not helped his cause by being coy about providing diagrams to help us understand what is going. Everything is a word salad, not an impossibly tossed word salad. People who are reasonably experienced in this can construct their own image as to what's going on. I have in fact done that, and when this Kaiser Watch episode is published, my blog piece will have a graphic showing what I think is going on. The reason Tim gives for not providing location and drill plans and sections is he's worried that Freeport, with its Baghdad operation in the vicinity, it draws its water supply from the water rights that it has in the area, and he doesn't want them to know, exactly where this hole is, which is foolish because, of course, they'll have been there. They'll have seen where the rig is parked. They'll have figured out what the azimuth was of the drill and what the angle of the drill was. So they'll know exactly where this hole was. They can read a press release, so they know what's going on. So why keep us in the dark? So I think, in addition to people not understanding what was going on here, there is a backlash to this lack of helping us see with graphics what's going on. Now, when I talked to Tim a couple months ago, he explained that he was not disappointed by the the lowish, the 0.4% that they were sort of expecting for the chalcocite blanket, because he said when we punched through it, the material below was impossible to have created that level of enrichment. It would have had to been much lower. And in the sort of Gilbert and Park model of a porphyry system, which I borrowed to help understand it, the enrichment blanket can actually extend sideways from above the copper shell. Now, the way this works is the weathering, the water seeps down, it dissolves the primary chalcopyrite copper, dribbles lower, and then precipitates it as chalcocite and thereby enriches it. So what they're hoping for is they move west, 900 meters. They will drill right through the really enriched copper blanket that's running, 0.6 to 1.5% copper, dropping down into, say, 0.4 to 0.6% copper of the sort that was there originally when the deposit was first in place as a porphyry system. The supergene enrichment comes later. It's a weathering phenomenon. So he wasn't disappointed by the result. I wasn't disappointed by the result. I was disappointed that they didn't find the edge, so that they know for sure that when they drill this hole 900 meters to the west vertically, that they would hit it. So there's still some uncertainty that it's maybe not there. The other thing the press release didn't do is that while it talked about drilling this 900-meter hole and didn't mention about not drilling the angled hole from drill pad 3, when I talked to the company, they said, well, one of our things is we were trying to get hold of a pre-collar rig, which is a special type of rig that drills the casing through gravel and sets it up for the core rig to then continue once the bedrock and get the stuff and to get the intersection that they want. And they've been struggling to do this and apparently have succeeded. The permit's not yet in hand, but it is very close. So they think that they will be able to get the pre-collar done, which will take a lot less than the 2 months or so to get through the gravel with the core rig, and then have the core rig going all underway, say by midsummer, and possibly a proper discovery hole by September. But there's still uncertainties there, and they haven't been clear to the market, at least not in the press release. So I think people are sort of walking away from this saying it's another bust. They found whatever it was that was attached to the stock to the west, to the root to the west. It's not very interesting. Goodbye, bell copper. And so this is a bottom fish opportunity, and hopefully the company comes up with some graphics so that people feel comfortable, that they understand the bet, that we know what the risks are, but we want to know that we are actually seeing this play as management is seeing it, not just try and figure it out from a word salad news release.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.